Hello, and we have an early introduction, so special guest is already here, but we are going to introduce him in just a moment. I want to welcome everyone to the show. Welcome to the market update with Landy, the Friday live stream edition where I bring on just some of the best analysts and traders in the game. And of course, this is brought to you by David Gockstein. Today is August 14th, 2026. And we're going to take a look real quick, TradeFly. I'm gonna actually share my screen real quick just to let my audience know kind of where we are at the moment in terms of, well, that's not looking correct there. Let's actually do this one, kind of where we are right now, and then we're going to jump right into a little bit of an introduction. So where we left off last week on this Wednesday, actually, we had the areas to the downside that were the potentials after swinging the top side of the range above $65,000. And we have now come down on the Friday candle in the Friday session and directly hit the lower second standard deviation and the bottom side of the range at 62.5 with a slight swing under. And that's all I'm going to do today. I will come back and I will give a little bit of an assessment, but we're here to highlight a good friend and guest, um, one TradeFly, and he is a technical analyst and trader amongst many other things here. So we've been talking in the background for a little bit. Um, and one of the things, TradeFly, that I like to do is obviously, as I mentioned backstage, is bring on people in this space that I think provide immense value to those who are not only learning to trade but also are traders themselves, like myself, who can offer a different perspective than the in terms of style and charting and the way that you view the markets versus the way that I do things. And I've talked to you on stages before. I've seen your content that you put out there. You do a great job. I know that you're primarily over there on YouTube. So for those that are on X, first of all, in the chat, please go ahead and like and share the stream out there. And also make sure you hit the main post and give TradeFly a follow. He does post regular market related videos, and he is primarily on YouTube, but we need to get that X following up because there's more people that need to be aware of you here, especially in my audience. So welcome to the show, the Friday market update live stream with a talking puppet, TradeFly. How are you this evening?
I'm doing great, man. Thank you for the kind words. Thank you for the opportunity to come up here and talk with you. Obviously, we've shared some spaces together, so it's very much mutual respect. I definitely think you're one of the best on X. Again, it's providing value, right? And you try to align yourself with the people that you see, one, that are legitimate, and two, that are providing, some value to the people, because that's really why we're doing this, right? So, because I'm not really making any money. So it's obviously for the love of doing it, for the love of TA. And I do trade, and that's the way that I'm doing it. really in terms of making money right now, or is really trading and showing you the wins, the losses. And one of the things I like to do is, when I lose a trade, I actually like to journal it publicly.
Mhm.
So I do like to go through why, or what I was thinking and what my thought process was going into that, and then what happened, why did it go wrong.
Yeah,
So
and I think that that's actually a really good approach, and I really like that about your style. I know the other day when I was watching your live stream, you did go through a few setups. You did discuss the trade specifically as well, and my audience, I don't
yeah,
necessarily discuss the trade setups as this is a market update show. Typically, I am informing people of where I'm looking at levels, which is why I think it is so valuable to bring people like yourself on the show and have you show exactly what it is that you're looking at. And I know that you are limited on time as well, so I'm gonna throw the chart up on screen, and we'll put ourselves off to the side, one side here. So give me a moment, and I'm curious as to what it is that you are looking at. Um, so why don't you walk us through what we got going on here in terms of the particular screen that you're looking at this particular moment.
yeah, absolutely. So one of the things I like to do is kind of go through the process and go through the flow. The other thing is understanding that, I'm talking to people that are watching this online, right? You have to have things that are visually appealing and that are easy for them to kind of fixate on and kind of use as targets. So I like starting here. And this is the liquidation heat map. So understanding that when people are going to be driven out of the market or liquidated, these are those high volume spots where you can see those liquidation events actually occur, right? And one of the things that we've talked about quite a bit in the background and on some other shows is that price action is really driven by liquidity in my mind. I'm a very big believer in that, and my trading style kind of revolves around that thought process. So this is a quick glimpse, right? This is not the end all be all. This is not how I necessarily trade. It's just a matter of like, hey, where is liquidity sitting? Where is the liquidation event going to happen? And I can easily look at these levels and then see if I have confluence between some of the other things that I look at, like order flow and the structure and the price action. And when things start to begin to align, a lot of people say confluence all the time, but essentially, when a lot of things start to align in a general area, that's when I get a little bit more excited. And when I actually execute a trade, I want this liquidity or the liquidation event, I want that gone, right? Because in my mind, that kind of reduces the incentive to drive the price in a particular direction once this liquidity has been moved out of the way. Right. So I
Yep.
look here and I'm like, okay, cool. We have some liquidity sitting at 63.3 and really around 62.3. Now, I want to preface this a little bit because when you looked at this map yesterday, because I am going to kind of talk about an area that I think a few of us were actually looking at when I went through some of the messages. And that was really, I think, around 62.6, 62.5 area. I was looking at that area in particular, and this map looked a little bit different because you got to understand when you're looking at this liquidation heat map, how it actually works. Yesterday, this was hot. Today, this is hot. Why is that? Well, because price action worked its way down, dipped its toes into that liquidity, pushed people out of the market, and then more people jumped in. So this is people jumping in, and this is where people will get liquidated, stop losses, yada, 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 all sit down here now. So it's continuously updating. This is a 24-hour
Yep.
version of this. So this will get hot quick. Just understanding that. I typically like to more so fall on the 3 day, but right now I got the 24
Mhm.
hour up. But again, this is a starting point for me. I'm like, all right, cool. We got some areas. Then I like to go over to order flow. Now this is Market Monkey Terminal. I got no real affiliation with those guys. What I have on the screen right now, 100% free. Anybody can
Yep.
use it, do what you want, right? Like you can do market market terminal, there's Kayataka, open market, all that stuff will give you generally the same information. But what is important to me? What's really important to me is looking at the passive orders. All right. So where you have these highlighted, and there's a lot going on right now, by the way. Like there's a lot of times where you look at this, not so much going on right now. There's quite a bit going on, but this goes back to yesterday, right? You see this wick down here, and right here at about 62.5, and I think that was a number that you said
Yep.
earlier, was around 62.5 is where passive orders were sitting. So how does that affect the price action? Well, if price is driving down and you see that these orders get filled, we obviously know that if it's getting filled, then there is a likelihood that you could see a reversal from that area. So if you're looking up here, you're like you're licking your lips at an area that's sitting up here, just like that. What this looks like is what this looked like yesterday, and that's when I was talking about that on my show yesterday. So that was one of the trade setups that you were probably looking at, was this area right here, and that was based on passive orders. Now, for me, I like to say my trigger. Okay. And when I talk about my trigger, what is going to make me pull the trigger? A lot of times it's open interest and CBD,
Mhm.
right? So you've seen open interest working its way up. And this is the mistake that I would say a lot of people make in the beginning is they look at open interest and they correlate it to price action. Well, you can see right now a very big divergence between price action and open interest. This is actually telling you that there's more market participation. So if there's more market participation, there's very nuanced because a lot of times when you're approaching an area like of where you think there could be a reversal, you may actually see open interest go down. And what that could be, uh, they could be covering their
Mhm.
positions or they could be exiting because they are actually in profit. People are trading, right? They could be exiting or just leaving their positions. And you can see open interest dip before you get there. I see that probably more times than not. However, in this case, you're seeing it push up and continue to push up. And that's actually a good sign. As soon as you see this CVD start to move to the upside with volume, so kind of hard to see, but right here, this is with volume, right? So not only did it make a turn up, but you also got some volume behind it. You got the orders filled and the bubbles are presenting themselves. So this is essentially, but this one's actually interesting. So this is actually a pretty cool thing to look at and kind of understand too, right? Because you're seeing a bit of absorption right here. This volume, this bubble here is actually more telling you there's some selling going on there, right? And these limit orders, so the market was driving one way and the limit orders were holding it up. That's classic
Yep.
absorption, right? So for me, that's a huge indication that the market said I want to continue to push, but the limit orders are saying no. And then you saw your open interest and your CVD start to talk to you the way you want it to. So that for me was, a great setup that I was looking at yesterday. And this is how it was kind of all marked on my chart, right? So then you go over to whatever you use in terms of your charting, and you start, you're identifying your levels, right? Like there's so many different things you can use, right? You can use fixed range volume profiles. I see people very successful with that. You can use order blocks. You can use pivot points. You can use, previous week lows. I mean, there's just so much. I've seen everybody do it. Analysis paralysis, for sure.
Yeah.
But this is one of those times where like it's all lining up. I mean, you got sell side liquidity, you got the monthly pivot, you got an order block, you got a volume node, and you have liquidity, right? We just talked about that liquidity. So 62.8 is where it presented itself yesterday. So this was exactly the area I was talking about. And seeing a reaction from this level. And right here where this break of structure was, you see the pink candle there, right? As you push down through that, right? That means it was a pretty aggressive move, right? Body is pretty large, close below.
Yep.
And then this is exactly where I was thinking about because this right here, you see how there is support and you can see constantly just touching, 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 and then the breakdown. And I was like, hey, likely to see a push up from this area, right? We come down, we push up, and then that is actually where I was like, this is probably where we'll see resistance. Sure enough, that's where you see resistance because it's retesting that level. Now, does that mean it's all over? No, this is just where, hey, it's decision time. You got to be careful. And if you got into a position, for me, I actually was sleeping this morning. I'm very upset about this, to be honest, because I talked about it on my show, but I missed
Yeah.
it,
Yeah.
unfortunately. Transparency. But stop loss would be here. And this is kind of my decision point. The way I like to monitor my trades, I continue to be active in my trades generally. But if I have a key level here, so 63.2 would be it. I'm looking for it to push through. Once it pushes through, then wherever I entered, I'm immediately getting my stop loss to that entry immediately. right? Because then I'm locking it in, I'm playing on house money. And just in case man says something crazy or the straight gets closed again, whatever the hell goes on in the world, I'm protected, right? I don't round trip. And if I do round trip, I'm just starting all over and looking for the next trade. So, that's very big for me. But ultimately, what I would be looking for in this case was this right here coming back up to retest these levels. Now, this was kind of the debate like, hey, you have an order block here, you got the moving average, you got some volume building, and you got the POC. So there's a lot going on here that you need to respect, but it's about a 2% move. And if you're looking at the wick, I mean, look at your risk to reward. Tell me it's not worth it, right? So, a 6 to 1. And when I'm looking at this yesterday, this is how I approach it before I get into it or before actual execution. I'm looking at it. Okay, we got some key levels here. We got the value area low. We got the previous week low. This is why I like leaving this stuff on, is
Mhm.
because then I'm like, all right, we have a few things that are lining up. How do I protect myself with a stop loss, or at least say, is this trade worth it? Can I get a 2 to 1? And that's kind of my starting point for a lot of these trades. The other thing I do is I start looking at the structure. Okay, so if I'm looking at the movement of the price action, I'm like, all right, cool, here we go. Like we're up, we're down, we're up, we're down. What's it kind of showing me? Well, it looks like it's kind of trending to the downside right now. I'm going to respect that. I'm not going to take a trade that's going to be outside of that. And that's why I have this trend line across the top. So I want to be under that. Anywhere my take profit is going to be or my exit is going to be below that trend line because I refuse to fight the trend. And I will tell you, in terms of saving myself, in terms of getting out and taking my base hits, that has been probably one of the single most important things I've done is actually stay within the structure of the move, because what we're doing right here is we're looking at this move and we're saying, hey, there's a little bit of a downtrend going on. I think we can agree on that. If
Mhm.
I'm taking a long position within a downtrend, the statistical odds are not as in your favor if you're trading against the trend, right? Like you kind of want to trade, you would prefer to trade with the trend, vice against it. So when you're trading within a trend that's opposite of what you're taking, a position you're taking, then it's in out, wham bam, thank you, man, base hit, beat Tony Gwynn, go to the Hall of Fame on singles. That's kind of how I like to live in terms of, going through some of my trades and then getting out of those trades. But I'm very big on not round tripping. And that's kind of the way I found best suits me. I know there's a lot of people that like to take profit. There's different ways to skin the cat, always. Everybody's got their own style there. But, simply put, that's really the way that, I like to attack getting into a trade and out of a trade. It's pretty simplistic, but it's repetitive.
Yep.
It's easy to teach. It bases, it's really based around liquidity. And we've had this conversation a few times, and I'll say it because I know but the people that are just seeing me for the first time or hearing me for the first time, when I really started to research and I really started to study, um, I came across two quotes that just resonated with me. And one of those is, "Hey, know the liquidity, or you are the liquidity."
Yep.
And the other one is, my entry is your stop loss. And we've talked about that one. We laugh about that one. But,
Mhm.
it's so true. And like, this is, I go through this with people a lot. And I'm like, if you start really like thinking about it and you start really dialing it back, you're like, all right, cool. Like here's probably an example, right? Like if you're looking at this right here, you're like, hey, there's liquidity sitting and generally in this area, right? Generally, right?
Yep.
There's definitely, and really all the way up. But anyway, generally in that area, well, you're probably sitting there, you're licking your lips, and you're like, if it comes back down here and we got this high volume node, I'm taking it. I'm jumping in, right? Liquidity is gone. Sweep the low and go, right? Double
Mhm.
bottom, right? All these catchy things that people say all the time. And they're like, hey, double bottom, you gotta understand, you don't see this. Like, let's take this. You don't see that. All you see is this, right? And so when you look at that, you're like, well, damn, that looks kind of juicy. And if you take a Fibonacci retracement level, right? There's a lot of people that love those. I do. And they're like, hey, it comes down to the platinum pocket. I know you've heard that. It
Mhm.
comes down to the 786, which is my preference in terms of using the fib and the high volume node. I got liquidity. I got it all, right? There's some people that would take this trade. I would say quite a bit of people or quite a few people would take this trade, or they're looking for a divergence, whatever the case may be at the lows. But so they get in, right? Let's actually, we'll take that out, get rid of that a little bit. We'll get rid of that. And there we go. So they get in, right? Here they are.
Mhm.
They're like, I'm King Dingaling. I'm King Dingaling. Look at me, right? And then bam, because their stop loss was down here. And then
Yep.
they're out.
Yep.
And then what happens? Then price goes where you thought it was going to go. It goes all the way back up. And you're like, what the hell happened? And so this is when it clicked for me. This is when it like really set in for me, because I got stopped out of this trade, trades like this many times. And I was just like, my entry is your stop loss. And I was like, damn. So he's getting in down here. And what I ended up doing, because there was a lot of time I wasn't really using order flow for a very long time. But what I was doing, I was letting this develop where it comes down and it takes all this liquidity, but I was waiting for it to reestablish the zone.
Yeah.
So once it reestablished the zone above, then I was interested in taking the trade. And that worked out very well for me, to be perfectly frank. I was
Yep.
waiting for that.
Yep.
But the added confluence of saying, hey, what is open interest and CBD doing? Because what that's telling you, simply put, and I've gone back and forth with some guys on this one. So I've been told it's Mickey Mouse shit and, a couple other things. But I would say that has taken, where I'm probably 55, 60%, a little closer to 70. And what it does is it says, where's your level? All right, cool. I got my level here, right? I see the passive orders, I see the liquidations, I see all that stuff. But what is the market doing? And that is giving you a very real metric of what the market is doing. It's saying, hey, there's market participation coming in aggressively. You can see the volume when they see those spikes, and then you can see that the longs are more aggressive. If I
Yep.
have that in conjunction with this now, so that's like that extra step of like, hold on, I don't want to just see this anymore. Now I want to see this with the order flow aligning with this, and when I see that, that's when I'm like, full send, I'm in, and I go large, man. I mean, my positions typically probably about 6 figures or more. A lot of times when I actually take a trade,
Yep.
with capital.
Yep.
So, but yeah, that's kind of me in a nutshell, honestly.
Love it, man. It's funny because I would say that the way, I'm obviously familiar with all of this stuff, and many of people in the audience have I noticed that there are people who are here are familiar with your style as well. I'm I'm familiar with a lot of the styles of trading, in particular when it comes to technical analysis, obviously, and all of the theory behind it. And like I was saying earlier, I think it's valuable bringing yourself and others here to kind of break down your thought process behind the trade, because we talk about these things a lot. I usually keep my shows, my recorded shows. I save the long shows for these live streams, but my recorded shows are essentially just trying to provide a guiding stone for the areas of interest for price action and where I'm looking, because there are so many different trading styles out there. But the one thing that is always true is we're working from the same order flow. We're working from the same auction data, right? So we will always find the confluences, just how you um, actually execute at the end of the day, right? Most of and this is something that I've often gone back and forth with some, fairly prominent analysts in the space, is that, well, you can't necessarily see or predict that, this, the big thing was 1010, right? The big dump off on 1010.
Mm.
It was
No,
it
that
was
was
brutal.
brutal. Yeah.
And I was like, well, if you can't predict it, why, a month before were myself and others talking about that exact level, and where we would potentially be hunting shorts, where we'd be looking for a top to come in if price structure cooperates and forms are in and around those areas. And And it is that we can come up with a million different theses, for how, or why things are happening. But all that really matters at the end of the day is what the market is doing and how you take advantage of what the market is doing. And in this case, what you've got, I believe, a version of PVSRA candles with the high volume candles painted on there. Yeah, so
Yeah.
it's very similar.
It actually also incorporates. So I've done a little bit of my own little AI
Mhm.
magic. It also incorporates
Okay.
Z score as well. I do like Z score. So I've kind of taken a little like Frankenstein of it, and it's based on this down here, which is proprietary, something I've come up with. But basically, when it gets into these overbought, oversold
Mhm.
situations, that aligns with this indicator. But yes, volume and Z score are two things that go into the calculation that produces these pink candles. Typically, you'll a lot of times you'll see it with these big moves where you get these impulse moves that people talk about that, and
Yeah.
that's kind of where
Okay.
that comes in.
So
But yeah,
yeah, so
it's
you got some special sauce. I love this because I know, I've had Ash on as well, who's he's created his own indicator set and suite. You've got your own thing. I've got my own thing. Now my thing is very, very well known based on Bollinger Band. It's literally just a triple bull band set with some extra sauce on there for BBWP, care of the
that's
caretaker,
funny.
right?
Yeah.
Yeah.
So before you
Yeah.
go too far, interesting enough. So that you see these at the top here, these little bands, or not, I guess more
Ticks or something, yeah,
the
kinda, yeah, yeah,
yeah,
indications, yeah.
this is it's this is actually from the BBWP. That's
Oh,
exactly what
beautiful.
this is. What I've done is I've taken BBWP, and this is basically saying how strong it is. So once it gets over, I believe it's 80,
Okay,
it starts
great.
to shade in, and then the bluest, like the lighter blue colors, is actually when it becomes its most like to the
Mhm.
extreme, right? So when you're getting over like I think like 90, 95 or something like that, if I remember correctly. So that's what I did is I took BBWP. That's actually, I think you used to work with Crown a little bit, didn't you?
I was not,
Um,
I've worked with a few of the devs. We've crossed
Cross
paths,
paths with them.
some of the devs, and
Okay.
I've been in
Yeah.
contact with some of the devs that he's, created some of the indicators. So, like, I
Gotcha.
got the blessing to incorporate some things into some indicators from, the freely available stuff,
Yeah.
as
Yeah.
long as I keep it free, right? So, like, my indicator.
Yeah. So are you familiar with his 5-day BBWP with a stochastic cross strategy that he was using for
Um,
a while?
I was probably in the cave when he was doing that because he was refining that over time. I think it was
Yeah.
like
Yeah.
18 into 19 all the way into 2020, 2021 run. He was really nailing that down. But I'm not
Yeah.
I'll be honest, I am not that up to date with it. Um,
Okay. Yeah. So that was one that I was using quite a bit back in the day. Like there was a 5-day and it was using
mhm,
BBWP and stochastic cross. And so I was like, how can I simplify this for dumb monkeys like myself? And I was like, cool. Well, this right here is BBWP. All right, cool. It's getting to the extremes, and then you get the bullet stochastic
yep,
cross to the upside. Got it. And then that was literally that stochastic cross. I think just after that, he was entering into the trades, and he did a lot of back testing on it. So I was like, cool, man. That's a cool little thing to have. And I kind of built that into
yeah,
this
and shout out
as
to
well.
Crown. Like,
So
he's
yeah,
obviously, he is
he's a
absolutely
G.
a G.
He's good.
He is one, he curated, and helped provide and backtest so many indicators for the developers that he was working with, and the developers that he was working with are absolute geniuses, like, absolute geniuses. I've talked to a few of them over the years. I know that different things over time, he's evolved into a different kind of a suite now. And I love it because that's what you should be doing is evolving and refining and continuously backtesting. If anybody wants to know who the backtest king is in the space, man, it is definitely Crown. 100% sure. I don't, is it still the cave? Yeah, no, it's still well, it's Eric Crown Crypto, right?
Yeah, I'm not.
It's still
I would
Crown's
imagine
Crypto
so.
Cave, right? So it'll forever be the
Yeah,
cave, right? But yeah, definitely in the coming out of the bear market of 18, boy, oh boy, that was a lot of fun, right? And a lot of really cool ways, and especially as TradingView refined Pine Script over time and allowed it to become a little bit more powerful, just kind of bending certain things to your will and finding little workarounds and stuff was pretty amazing. And those that whole crew over there was absolutely killing it on that front. Um, so incorporating
yeah.
BBWP, which I think the caretaker absolutely hit it out of the park. Direction, neutral, volatility. Here we were for so many years, kind of going, well, Bollinger Band width, Bollinger Band percent are great and all, but it's not really. We need a better volatility metric than that, right? Because when you start getting trending structure outside of the bands, you're moving into that and gauging where you are. Um, well, John, I think, is an absolute brilliant man. I think that what Caretaker did with BBWP is just take that Bollinger Bandwidth and percentile and just level it up, because you can use it cross markets, you can use it independent of bands, you could just use it as a volatility metric, and kind of like what you're doing right now. Because do you use bands anymore?
I mean, I look at that really the one thing that kind of resonated with me that I took from that was, hey, like, are we coming to an end of a trend, or are we looking at potential for some volatility? And that's about as far as I take it right now. So no, I don't put bands on my chart. But I will kind of pay attention to the little shaded regions at the top, basically the BBWP, and it's really just taking BBWP, takes the middle of it out, and just says I'm working
Yeah.
only with the
It's either
extremes.
compression or
So
you're either at the extremes of compression or the extremes of expansion. And like, if you flip
yeah,
to a
exactly.
daily here, I'm curious. Oh, this is USDT. I was gonna say, if you flip to a
Yeah,
daily,
that's
um, yeah, you should have some shaded regions on the bottom. Yeah, exactly. Yes, because this is some of
yep.
the tightest that we've been in a very long time in terms of the Bollinger Band set. BBWP is absolutely floored.
Yeah.
Granted, we're getting a little bit of movement on it because we moved away from the basis, but yeah.
Mm-hmm. Makes perfect sense because right here you can see 1, 2, 3. That's as extreme as it gets
Yep.
on my little
Yep.
indicator right there.
Man, see, this is why I love having folks like yourself on with me, because it is one, it's a treat for me to see your process, but also it illustrates to the audience that all of these things, like we're all very familiar with how all of this stuff is put together, and to put a new twist on something that is really well established and really well respected in the space is awesome stuff, man. So that is a stochastic, right? Or
Yeah.
or what is your on the bottom here? What do you got?
So my yeah, it's again very very proprietary and tailored to myself and myself only. If people look at this, they're gonna look at these diamonds. They're gonna be like, "What in the hell are the random diamonds all over the place?" Well, those are stochastic crosses. So the white is a stochastic cross to the upside. The blue is a stochastic
Mm,
cross to the downside. Again, I didn't want lines all over the place. I wanted a very clean, something that I can easily read. And it doesn't, I mean, that's the easiest way to present itself is just, hey, I'm just throw a diamond on there. So very different than any on there that literally just symbolizes a stochastic cross. And that's
okay,
really that simple.
very nice.
So yeah, yeah. I wanted
That
to keep it as clean as I could. So
that's a really good way to do it. Look, I mean, I know that, I have a problem. I have a problem with lines. I like a lot of lines. I like a lot of zones. Um so it's just my personal preference. It also comes from the way that I set my alerts. So I have like this need to show these zones, and I have alerts typically for my, although I have a stream chart that I show the audience. Um for the sake of like keeping things high level and simple, this is where I'm looking, this is what I'm looking at, and if then, kind of like an if then else statement like you would see in
yeah.
programming. If this breaks, then this, else I'm looking for this kind of a thing, or
Yeah.
conditional analysis, as I like to call it. We need to see certain conditions met for price action to do certain specific things that we're looking for. And, but for myself personally, all those same lines that I show the audience, those are all alerts on my chart. So when that gets hit, typically I've got resting orders. Like when you were looking at liquidity, there's zones where I got picked up. The reason why I got picked up at 62 and a half today is because that was resting orders, right? So when you're
Yeah.
looking at the, whether it be market
Ah,
multi-terminal or you're looking at the liquidity levels, I
dude,
had.
I need to get better at that. I gotta grow some balls because I've gotten so wrapped in the mindset of, the one we were talking about down here where, hey, I wanted to see it reestablish the zone, that I'm always waiting for that now. Instead of just being like, everything aligns, everything's there. I put a trade setup out there for the world, at 62.5, 62.580, I think it was. And I don't have the balls to put the limit orders in there. I just don't I don't know. I doubt myself. Like I want to see the price action. I want to see the reaction.
Mhm.
And that a lot of times, causes me to miss a substantial amount of trades, but it's all there. When you have the liquidity, the liquidations, the passive orders, when it all aligns, it's just I think my trigger was seeing the open interest of the CVD and the market, agree with my bias is what I'm always waiting for. And that I really struggle with that to be perfectly honest with you, just putting limit orders out.
Well, it's and as for the audience, you're gonna see more of myself, Tradefly, and others. Um, this is actually where I think maybe my perspective on markets might match some of what you're thinking in terms of leveling up in that particular area because I'm a higher term time frame trader, right? Now, granted, I'm watching weekly to dailies, and daily closes are very important. Structural areas of interest being hit, swept, whatever the trending structure looks like, trend breaks to trend reversals or trend reversals to trend breaks, that kind of thing. Um, so, for instance, as I was explaining on the Wolf Bitcoin stage today, I posted in one of the chats at about 7:20 Pacific Standard Time this morning because I had my 62.5 order picked up, right? In this case, what ended up happening was I have a resting order there, but I have resting orders all the way down into the 62 2 area, 62.3 or so. And
Mhm.
that's a first tranche because what I'm looking for is if we break down, um, great. If we don't, it's a range trade for me. And it's actually hedging the short that I took above $65,000 because for my range, it's 62 and a half to 65. So I went short on 60 above 65 when we started to get lower term time frame structural shifts and a rejection. Um, and then I took the long at 62 and a half in order to build that position out if we do get a range break to the downside towards the lows and potentially lower, even down into the mid to low 50s. I'm layered in because I'm looking at this being a longer term trade, not a day trade. I'm willing to sit in the trade for a couple of
Gotcha.
weeks. I'm managing my risk much, much lower. And in fact, I'm actually hedge that this is still hedges against my short side positions. So what I like to do is I'm bracketed in the range right now. So I'm still short with 50% of my profits taken off of my $65,000 short position or in and around there. Um, and then on the other side now, I'm long 62 and a half. So I'm bracketed. And what
Yeah.
I'll end up doing is I will let one side of that trade go at one point, and in this case, it would be letting typically what I used to do is let one side go. So kill the long if it gets stopped out at 60, at like 61 or something along those lines.
Mhm.
Um, and then I see we have another guest that just popped in. And then then I would, just ride the short side down. Or if the short side gets stopped out, long side, ride it up. But at this point in the market, I am more interested in building out a much larger long-term swing trade, even if we start dumping out aggressively. So I'm layered very specifically, all the way down into some extremes where the orders for the trade might not even get hit. So I'm
Mhm.
actually long on the DCA side in those areas, but I want the trade to be in now in those areas, even if we go to some extreme downside levels that some of us have talked about previously. So,
Yeah. That's one
um,
thing I've been doing is laddering into a position, but that really kind of played a little bit into the 4-year cycle, and that's probably the last thing I got, and then I'm gonna roll out of here. But I've been laddering in. I've been very public about that on Spaces, as well as on my X, and that really had to do with I wanted skin in the game, as we could see this price action working its way down. And it really, again, it really, a lot of that analysis came from the 4-year cycle. I know people are kind of mixed on that, but a 75% drawdown is well within reason, and it matches what we've seen historically a couple times. So to position myself based on that, I didn't think it was a bad thing. And what it does is it gives me exposure as we project that the price action could continue through Q3, Q4, late Q3 to Q4 of this year. And so I was looking at 72K. The last one here was 58. I just got a position filled. So this is when I do get in limit orders, and I'm not being a wuss about it. 72, 58K, and then the last one was the full like retracement. I think I was front running a little bit based on I think lows. I went all the way low to high because the last couple times we've seen it pull back to about the 0.786, which would be about 40K. So 72.58 was my last fill. And then I was going to front run the 0.786 based on the POC of this range over here. And I was looking somewhere around 44. And so that's, bringing my call spaces somewhere in the middle there, probably about 58 or so would be my call spaces. And I was going to let that thing run through essentially the next cycle, basically 3 years, 9 months ish. And then I was going to ladder out of that position just like I laddered in. That's again long term, big swing trade type stuff, like you had mentioned. But that's where I feel comfortable with that one. But yeah, man,
Awesome stuff, man. Well, I appreciate you coming on
yeah,
Tradefly and taking the time. I know you got to run, so if you have any parting words here, or else just a goodbye to the audience out there. We're going to get a lot of replays because it seems as though X is having some issues with links and reposts.
this would be the
And
day,
of
wouldn't
course,
it? I bring the messed up trons apparently. Bits, good to see you up here, brother.
Dude, I had to come on here to give you a hard time.
Treat
You're
the
over here
people.
talking about giving.
I
Get,
know, man. Call me a
dude.
Canadian and stuff. Goodness gracious.
wait, what?
This
What?
guy, he's like, that's the worst insult you could give me.
Good
What is this?
Lord. Do better. I mean,
Oh, man.
Jesus. Hold on. I got something for you. Let me see if I can find it.
Mm.
There you go. Bam. America. You son
Oh,
bitch. There it
dang.
is.
Look at
Hell
this
yeah!
Yeah. You see my
See?
background now.
Look
Yeah.
who the odd man
What
is
can you
out.
say?
Look who the odd man out is now,
Yeah.
huh?
I'm going to
Yeah.
have to, yeah. Look,
Can't even show your
that's right.
face, huh? Look at you.
That's right.
All right. All right. I got to go. I got to go get my daughter from gymnastics. Hey, love you guys. Thank you for having me up. It's much, much appreciated. We will definitely have to do it again sometime.
Hell
So
yeah, man.
you guys stay cool,
Much
man.
love.
Thank you. Appreciate it.
Thank you, Tradefly.
Later.
That is
Absolutely.
Tradefly, everybody. And once he bumps off here, you're gonna see just a puppet talking to a PFP for a moment. Bits, how are you this evening?
Dude,
Thanks
what's
for
up?
jumping in, brother.
Yeah, mainly came to give that guy a hard time before he left. But
Yeah,
yeah, I figured, you know what? I got a few minutes. I can jump on, see what Landy's up to.
yeah, yeah. Well, it is one of these days where, I got my level hit bits, and
Yeah.
I was very happy. You saw the post in one of the trader chats this morning,
Yep.
at about 7:20. For those that are unaware, look, just about anybody that's in the chat here watches my stuff. They watch your stuff. They probably know trade flies
Sure.
as well. So we've all been looking in similar areas of interest. Um, for me, what I find interesting, is that we held the range.
Mhm.
And I kind of expected that because it's a Friday. We were either gonna hold the range or we were gonna break down more aggressively and sweep those lows. But a
Yeah.
nice little sweep of 62.5, lower second standard deviation on the Bollinger Band. Compression remains in play until we actually see this start to
Yeah.
break the range on some sort of volatility or expansive move. So not anything too crazy. Like, this is kind of stuff we've talked about across stages. You've shown on
Yeah.
your live streams, which, by the way, for anybody that isn't paying attention, I'm only 3 days a week typically, putting videos up and doing a live stream on Fridays. Bits is streaming every day, not just what, and sometimes multiple times a day. This man has the sickness.
Sometimes up to 3, yeah. And then spaces.
Yeah, and then also on Spaces at this, and sometimes at the same time, even unmuting every once in a while from the stream to go on Spaces to throw a comment in every once in a while,
Yeah,
yeah.
yeah, man.
Um, Look, I mean, I told Tradefly, like, one of the gonna be seeing a lot more of Tradefly and
Yeah,
yourself, and myself here, fairly soon, I believe. But one of the bigger things is like the confluence across the different it never ceases to amaze me. I'm still amazed every time. Like, the confluences between levels, completely different trading styles. We talk about
yeah.
this all the time.
Dude, I'm shocked sometimes where I'm calling out a level and you're like, "Oh, that's perfectly on, like, my first or second standard deviate." I'm like, "Dang, that is wild," because 'Cause I'm
It's
not using Bollinger Bands, right?
Yeah. And this is it, and it's interesting, and I've talked about this before. We're all working from the same data set. That's one of the
Yeah.
reasons why we're going to find all the same confluences. And when you do technical analysis, right, you're going to find those confluences with others who have different systems.
Mhm.
And this is also where you tend to get the folks who say, well, if everybody agrees, then you're wrong. And that is just not true. It's if everybody agrees on these esoteric ideas that are not data based, that they are
Yeah,
wrong, in my opinion. It is
yeah,
one of those things that I think there is an important distinction to be made there, because there's a lot of folks that, like, well, they all agree on stage here and they're on a stream and they've got,
yeah,
50 million lines and they're eating crayons and drawing those lines, and they're all talking about the same thing. So obviously they're going to be wrong. It's like, well, no, um, we are literally testing our own thesis against each other,
yeah.
which is the most powerful thing you can do in markets if you want to, one, learn more, level your game up, but also check yourself, right? There's
Before you
there's
wreck
things.
yourself.
Exactly, and there's things, because you have a different trading style than me, and you also trade different time frames than I do, just like TradeFly and many others. But there's things that you talk about specifically that he was just talking about, that I'll go, "Oh, yeah, that's right. I should probably go look at that." Because I haven't looked at, this aspect of the data, or I haven't looked at the data in this way, and it could either confirm my opinion, my already existing opinion,
Right,
or it might change my opinion, right?
right.
And, I think it's very valuable. Shout out to TSN, brother. It's been a while. I know you've been back. You've been back. I see on the timeline. Big shout out to you.
Yeah,
Uh,
no, TSN's, he's a real one, and he's been hanging with us for a while, I think, so,
oh yeah, for sure. Like,
yeah.
he's got some things that he put in here. He actually asked a question. So I have to go to X. Actually, the chat just appeared. Holy crap! It
Yeah,
just
the chat's working in here for me.
Okay. When
Mm.
we first started, there was nothing, and I could see it
Mm.
because I'm in the chat on my phone. But he asked a question. I'm actually curious if you have an answer, because he asked about backtesting tools, like AI backtesting tools.
Mm.
Now, I still do it the old school way. I still manually backtest. I put it all in a spreadsheet. Although now what I do is I use AI to do all the calculations and stuff for me that I would normally manually do,
Mhm.
because it just makes things a lot easier. I can have it construct and, like, take the spreadsheet and then make all the graphs for me right away. So it's improved that workflow. But, like, I'm still like, I still have a pen and paper journal that I journal my trades in,
Nice.
and I still use a spreadsheet. And he posed a pretty good question, like, what is there, like do you know of any, like, good back testing, AI tools that are out there for traders?
None that I can think of off the top of my head. There is one really cool platform, and it's more so for TradFi, like if you're playing futures
Mhm.
versus crypto. But Edgeful, have you heard of Edgeful?
I have heard of it, I never have
Um,
followed up with looking into it,
so
though.
it's essentially that, like they built a database that's going back and scraping um, market data based on setups, like how often when you break high of day do you see it go all the way across to low of day? How often when um, the market's initial reaction on open is positive versus negative, does it end up with a positive or negative day? They've got a whole set of things, and there's a bunch of indicators that they've built around this system as well. Andre is actually the founder and CEO, and
Mhm.
I had a call with them. It's really cool. I almost actually took him on as like it wouldn't have been a sponsor, but it was like a affiliate partnership type
Mhm.
of deal, you know.
Yep.
But they're more heavily on the TradFi side, and my audience is more so on the crypto side, right? But
Yep.
dude, what they have built, I feel like if they build out the crypto side of that, it's going to be an amazing, amazing tool. So, but yeah, it does a lot of that. And so you can go in there basically and just look at, okay, historically, when XYZ happens on a Monday, out of the last 200 days of Mondays or whatever, like how many of them are green versus red, and it's very granular, and there's a lot, and you can really filter it out. So it's a pretty cool tool. I was using it for a little bit, but it is more centered for it's built around like futures trading for sure.
Okay, yep.
Yeah.
Yeah, that's so, well, I do
But it's
find
gangster. But it's gangster, dude. Like you if you go poke around in there, I think you'd be impressed.
I'll have to do so now,
Yeah.
and maybe link me in the background here,
Yeah, yeah,
because
for sure.
there's 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 a lot of, there's a lot of different tools that I've tried over the years, and a lot of, traditional market tools that a lot of people have adapted to work in the crypto space, but,
Yep.
the volatility is usually the volatility monster, comes for all in the crypto space, as it
Yeah,
does in traditional markets, but,
sure.
traditional markets are a little bit more. I would say that Bitcoin, I will stand on this. I think Bitcoin is the cleanest trading asset on the
Agreed.
planet.
Agreed.
Um, but when you look at the entirety of the crypto space, the rest is not, right? It
Yeah.
it can be just absolutely
Yeah.
chop city and just wacky all over the place, tons of market manipulation from whales,
Yeah. Well, and
VC
then
players.
even like the session breaks give you a bit of structure and a bit of a reset in the traditional markets, whereas a 24/7 market, you just don't get that, right?
Yeah.
It's the difference between I don't know what's a comparison we can draw here. It'd probably be the difference between um, well, what would have been prior World Cups to to the recent World Cup with hydration breaks and all this,
Yeah.
all that extra stuff. So versus it was like, nope, first half, you better be ready to go.
Yeah.
Yeah,
It's interesting though because we talk about like the audience that we have in this
yeah,
space primarily is not really there is a lot of crossover with traditional markets, but it's
there is, and
primarily
it's
all
growing.
crypto focused, right?
Yeah,
But we are very quickly speeding towards a world where we are
yeah,
going to have the collision of the two, and we're going to see that the larger pools of liquidity are going to be, in my personal opinion, outside of the majors for cryptocurrencies, on chain. The primarily focused liquidity that's coming in is going to be to provide liquidity for those stock token and RWA pairs. I am
hmm
I am 10 toes down on that. And in fact, I said this in one of the trading groups. I said that give it time. Before long, what we will find is that stable coins will be the largest market cap in cryptocurrencies.
Yeah, that market cap is on a up into the right trajectory for sure.
So
Yeah.
I'm curious. We've talked, you and I,
I don't
and
know what
others.
effect that would have on dominance, though. I think that's still the
Yeah,
unseen
that's
question. Like,
you
does
knew exactly where I was
yeah?
going with
Because
this.
I like the dominance chart is always going to have a structure that is evolving, but I think cycle to cycle it gives a lot of clarity. But yeah, I do think over time it moves into and builds structure around higher percentages, but I don't necessarily think it's going to be a straight up and to the right like the market cap would. The dominance
Mhm.
chart I still think could have significant pullbacks as crypto is still heavily rotational, and it feels like people in crypto, at least up till now, I mean it doesn't have to be the case forever going forward, right? But at least up till now, people have been very all in or all out, right? I don't think there's been as much like scaling in and a balance of, do I have 30 to 40% of my port in stables that are earning a steady yield on, locked up on some DeFi platform. And then the rest I'm kind of, between majors to mids to smaller micros, like it's divided based on risk. I don't know that crypto has done that yet. I think crypto is getting smarter now. But
Mhm.
previously, I think people were all in or all out. It was like bull market, I'm all in. I've got nothing in stables, no dry powder. Or bear market, if you were savvy, you're pulling quite a bit of that out and putting it into stables so you could have that dry powder, right? But
Yeah.
yeah,
So
I don't know. It's gonna be interesting to see, man.
here I'm gonna float this thesis to you.
Shout out to Ash, by the way. I see our Aussie friend is in the chat.
Oh hell yeah! What's up,
Yeah.
Ash? Um, oh, and shout out to Coin Kong. Much love to Coin Kong. He was up late last night, as was I, and Mr. David Gockstein, the one, the only, making roast songs about all of us. And although he didn't get a roast in on Coin Kong, he definitely did roast all of us
I'm
with
sure
these
he did.
songs. And then Mr. Coin Kong here got in a nice little shot at our friend Dave from ATC as well,
Mm.
which was funny. Poor Dave, he kind of took it on the chin there. After David G was cooking in the background, being slick, all slick like,
Yeah.
came out. I got smacked down across 4 different songs, bro. Like what the
Yeah. But that's your
But
job. You're paid
yes,
to.
I am the Triumph the comic dog, like so. But one of the things that I wanted to float to you is well, I agree with you on dominance. I think that it will correct, but I think that dominance will continue to rise as we see
Yeah.
more stables printed into the market just because of its total market cap. But I think structurally you have to pay attention regardless of I think it's going to be more important to watch lower term time frame structure, your weeklies and
Yeah.
your dailies. Where I do think that there is a world in which we see a 20 to 30% stablecoin dominance chart,
Oof.
but also that doesn't mean that Bitcoin is down and crypto is down. It just means that because we have so many new stables coming into the market to provide liquidity for these things, that I don't think this happens soon. I'm drawing the S curve here as bait, but there I do believe that we will see a continuous uptick in dominance for stables, and then we will see a continuous downtick in dominance where for Bitcoin over time as stables come on chain. Because a lot of these, especially when banks get into it, and if they happen to, let's say, they happen to pick a stable that they want to use, well, they're going to need to they're gonna go to these if they don't issue it themselves, they're gonna go to a Circle or a Tether, right?
Mm.
And they're gonna, we're talking billions and billions and billions of dollars. Whereas, we're looking at in terms of stable market cap, what are we at? Just USDT at 183, USDC at 70, almost 72. You could see a doubling in the coming years of stables in the market. That doesn't necessarily mean what it used to mean, though, is rotation, right?
Yeah.
And that therefore my theory behind that would be is pay attention to the rotation on your dailies and your weeklies as but don't be surprised if it just continues the longer term uptrend as more stables are printed into the market. We're seeing stables printed into the market. I mean, look at this is a mess. But if we go to a weekly, it'll be a little less of a
Yeah.
mess, right? Now, granted, look at this entire bear market, right? We've got from October, you get more liquidity into the stables, which means that as liquidity transfers over, you need more stables being printed, right?
Yeah.
But on the way down, it's come down. Obviously, we know what's kind of going on with that. I think that this kind of stuff, this overall longer term chart, though, for market cap will continue to rise. I mean, the aggressive rise as we were getting stable
Yeah.
liquidity into the
Yeah,
markets.
because this reflects basically US dollars being
Yes.
converted into crypto stablecoin dollars, right?
Yeah. And I think
Yeah.
I really am of the opinion that stock tokens and RWAs are going to be the primary drivers behind that.
Yeah.
You know,
You know the only reason though, Landy, that I'm really curious about the dominance side of it, because I'm with you fully on the growth of the market cap. The
mhm,
dominance part is where I'm not fully planted on either side yet, and that's because although I think a lot more money, a lot more liquidity is coming into these markets, I don't know that a lot of it necessarily will remain in stables. I think especially now, like look at what Ondo Perps, for example, is doing, and there's a couple other platforms that are doing it where you can now go buy tokenized stock. You could go buy the S&P, right? A tokenized version of that,
mhm.
and hold that tokenized asset as collateral as well, right? Instead of holding fiat. So I don't know. I think it's going to be interesting. I again, I'm not like really. I don't have a strong thesis on either side, but I want to say I don't think it's going to be as up and to the right in terms of dominance.
Mhm.
Um,
Okay.
eh, versus like the market cap, because I think this could, as money comes in, it could, number one, I think it's likely to remain rotational, but I think we also see a lot
You
more.
see all the other market caps grow in
Yeah,
tandem.
yeah,
Yeah.
yeah, exactly.
Okay.
Yeah, yeah.
Yeah. You know what?
Like I'm not
I'm
planting my
glad that you're,
flag there and
yeah.
saying I'm 100% sold on that's what's going to happen, but to me that's what currently makes more sense. But I'm
Mhm.
open to learning and figuring it out as it goes. Right?
Yeah, same. I mean, this is purely a thesis, and the thesis is based on I believe I personally believe that a lot of the larger players on Wall Street and a lot of the banks are going to prioritize liquidity for their products over um that seeing that liquidity flow towards meaning we will get the rising tide of liquidity lifts all boats, right? But that it will accelerate on one side because you have to fund up the pair for stock tokens and RWAs, right? Like if you're going to have an Nvidia stock token and Nvidia RWA and you need to have the liquidity for it, right? So where is that going to come
Uh,
from? Um And I'm not like dead set on this. This is purely a thesis that I'm floating out there. There's no real data to back it up with. The data that we have now is the norms that we already know, right? But in terms of theory crafting, which is fun to do, um, but means really nothing. It's just an idea on my side as I'm watching less so the chart and more so evaluating the fundamentals of what it takes to actually quote unquote tokenize the world as many of these large players want to do. Your Larry Finks and all. Um, so it's going to be interesting to watch. And I think that you might be more right than I am in the assessment of like when you get this extra liquidity, everything is going to rise with it, right? So essentially, you get some equilibrium for the dominant side of things, right? So, and
it'd be
I
interesting to see.
I think so. I think so. Um, but then you've got it's funny because you can also calculate things any way you want, right? Once you tokenize an NVIDIA, you can sit there and look and say, well, NVIDIA is tokenized now, or at least a portion of their stock is tokenized now and actually deliverable. Therefore, it is one of the highest market cap cryptos, right? Like you could split hairs and like make arguments like that, and we will probably see that as this begins to happen anyway, so that people can steer narratives. Um, but yeah, man, it is gonna be intensely interesting. I'm curious, as I've got the USDT, USDC chart here for dominance, do you have any, we just hit a major 786 and are pulling back from it a bit.
Yeah.
Um, do you have, any view, out there? You don't have to show a chart or anything, just curious.
Let me pull mine up real quick and see what I've got on there. I don't think I have like a strong take on it right now. The one thing I've been pretty consistent on, and I still think is mainly what I'm looking for is so on the stablecoin side, I'm looking at the low of last month, man, and I'm thinking if there's another kick to the upside that would take out that June high, I think it makes a lot of sense that you sweep that July low, on this chart. And so, like on Bitcoin, it'd be the opposite, right? On Bitcoin, I'm saying if there's another leg down below 57,
Yep.
I think it makes sense that we take out the high of last month at 67, if I'm not mistaken, right?
Mhm.
Um, so that's kind of what I've been thinking here. The fact that last month didn't sweep the high of June, to me, that still shows that at some point I do think we come and we sweep that up. But same thing with this month. Like we're technically, um, 16, 17 days away, and currently have not taken the high or the low of the last month. And it's kind of typical behavior on this chart, though. I mean, on the monthly, you can look to the range just down into the to the left of us, but it kind of did the same thing where you had like two or three inside bars, before you got that big break. But
Mhm.
but they were sweeping, in one direction. You were seeing that you were getting lower lows inside of that larger range before you got the trend, and the push up to the upside, right?
Yeah, before you got the actual trend break. What I
Yeah.
find interesting is
Um,
that, we finally closed outside of that swing high for USDT, USDC, which was at,
mhm.
12.56%. We actually got the close above there at 13%. So, holding this and then holding the like you said, holding the lows here on the highs of dominance, is I think, pretty interesting, kinda holding that 11.87% there, I think is interesting. And obviously it reflects exactly what we're seeing at with Bitcoin inside the range, right? Not really doing a whole lot for quite some time now. We're going on, since June 1st, essentially, since getting in here, and it's pretty much reflective of what Bitcoin has been doing since June. Um which means we're loading up for a big move. Like that's really what it means, right? Whether that move gets rolling at first to the upside or the downside and then picks a direction or not, or just picks a direction right off the bat remains to be seen, of course. But we're all kind of I know you're a little bit lower term time frame. You'll get in there and you'll play. I know you do some higher term time frame trading as well.
no.
Um, are you bored yet?
Yeah, I mean, I haven't had a good like weekly swing in probably a week and a half, 2 weeks, something like that. So, my average hold time is 8 to 9 days for a trade.
Hmm.
So, and sometimes that means the first day,
So
sometimes even the
you're
first two
you're
days.
more on the swing territory
I
side.
am more on the swing side. I am definitely more on the swing side. I will scalp though. I take I'm a little more degen than trade fly. Like I will set those limits and let them play out. Um, I'm just really good with the risk management. I risk. I put myself in a position where like it's a tiny slap if I'm wrong in the process of finding the entry and then waiting for the confirmation to add to it. Right.
Mhm.
But yeah, I prefer a trade that I can get into on a Tuesday and then hold it till Friday or Saturday or Sunday, or even the next Monday, and then close it out. Like that is my preference for sure.
Yeah.
No.
And, I'm
And talk smack to Crank the whole time about how he
same,
closed it too early or whatever, and I'm
same.
holding it right. Like that's just the way I trade, and Crank can sit there and trade it at 5, 6, 7 times in the process. And he kills with his method, by the way. But
Yes, he
yeah,
does.
I just like to hold it, dude. I like to I get my position in. When I set it up, I know what I'm going to lose if I'm wrong, and I know what I'm going to make if I'm right, and then I just let it play out, and it's just hands off for me. I like that.
Yeah, man. Look, I'm actually I trade more like you, right? Like, I do get into some scalps here and there. Like today I took but it's it would only really be as I took some positions that I did close, but it wasn't on Bitcoin, right?
Yeah,
Like I took a little bit of a bounce trade here and there, but only because I was sitting right in front of the screen. Um, I'm bracketed right in this range. I'm schlong, as they say in the
yeah,
game. So I got a short and long, and I'm willing to actually build to some lower levels. What I find interesting is we have like direct confluence with the weekly Bollinger Band set. If we start to break down the lower first and we have to meet the
yeah,
conditions for price action, actually break the lows in the low 61 area. But
yeah,
then, it's the lows and lower are back in play. And if that breaks down, lower second is now right at the top side of these weeklies down here at 54 to 56, right? A lot of people looking at 55 as a number down there, right?
yeah,
Um, but more importantly, I'm starting to see if those weeklies in the upper, if we were to start moving down, obviously we'll be way ahead of these things on lower term timeframes, but the trend reversal setup still has me interested in further downside. I know that you are in the camp of
I'm still camp 70, like at least
yeah,
67, 68 before 55. But I,
yeah.
I really do think we could hit that, 69, 70, somewhere in there at least.
If we did that, so like I have confluence right now, basis band right at 68, 69K up
There
to
you go.
70, which is the weekly zone for me,
Yeah,
70 to
mhm,
72, and then 70, 74 to 76 up there,
yeah,
which lines up perfectly with an upper first standard deviation. So basis band in and around 68 to 70. You see swings above it, could easily hit that weekly at 70 to 72.
yeah,
Um, but if we saw that, that would be a structure break for me, right? So because this was a closing lower high after a lower low came in on a close. Yes, swing structure was already lower high, lower low, lower high, but closing structure, this is one closing low for me, and this is one closing lower high trend reversal setup after a big trend breakdown, which for me points to a retest of either the lows or the lower second standard deviation. And if we were going to initiate further expansion down, not only are we looking at the low $50,000 range, but we're looking, 52 to 54, maybe even down to 50, but that's starting to open up
yeah,
anywhere below the lower second and losing this weekly zone, starting to open up really down to 48 to 50 and potentially more down to that monthly area at 48, 5.5. But to the upside, look at I know this is a lot of lines and I am a line drawer.
you got all the lines on there.
I got every line you can think of. I got dailies, weeklies, I got monthlies. I can give you every line on the chart, man. I got them all right here, right now. But more
But these are
importantly,
these are hand drawn lines, is what I'm impressed by. These are not
yes,
auto lines,
yeah,
that's using TradingView AI and just
mm-mm.
throwing a bunch of garbage on
No,
there. These are
I
beautiful
specifically
handcrafted
so what I
lines.
with these handcrafted and curated lines, I actually
Artisan lines,
learned.
even you could say.
Yeah, I learned that you can't eat the crayons first. You have to draw the line and then you eat the crayon. So like I finally now that I figured that out, one of the keys that I was discussing with Tony last week um, is upper first now is right there at that 76, but more
Yeah,
importantly, the upper second Bollinger Band on the weekly, which we don't need all these lines, but it does line up with my lines, and I love my lines.
yeah,
I can't get rid of them. 82 and a half is a monthly, right? We swung
mhm,
above that, but that's where the upper second is. Upper third is now right at that weekly zone
yeah,
that we were holding. So, like, we could even see like crazy structure breaks that do nothing because if we
yep,
don't close above that area, that upper third,
yep.
guess what? The whipsaw goes back to the downside, right?
Yeah.
Not to the upside. You got to close above that. You got to retest these bullishly all the way back down here, which means that we could get up all the way up. We could rally to 90K. Does
Yeah.
nothing, because when we come back down, we have to mean revert at minimum. In my book, basis to lower first, which literally would be the lows again.
Yeah.
Um, and then there's the danger of it, the whole thing being a deviation, and then you just go lower,
Correct.
which we saw with structure breaks back in, and Tony brought this up, right? We saw
Yep.
that with the structure breaks back in 2018, bear into 2019, where we retested the all-time high monthly, not the highs, the actual highs, but the monthly close. So, and that was wild going back in time, which um in that in that structure back here, one of the keys here is we hit the there was this structure over here. I knew it didn't look right. So we actually compressed and expanded all the way up and then hit this for a band setup. Um, which we just hit an upper second, right? So we were in an expansion coming into a compression. So when I see that, it's like, oh, yeah, this is going to be a rejection. I remember specifically talking about this at the time. Upper second standard deviation, we were going from a big old expansion up into a compression, and it was still compressing as we were rising to meet the and close above the basis and spike. So it was like, okay, we're either going to put in a major high here, or we're going to break it and actually run the highs. And then you have a big old zone that it would need to beat, and it needs to beat this zone over here. And I got torched by people for warning them that what you had to be aware of this, because even if we broke it, you got to look for, broke above, you have to look for the structure break and then higher low. Now I will fully admit, on a monthly time frame, because I am high time frame bias, I actually got in positioned here off of a higher low after a lower high, higher low close. I positioned on the higher low close, and then I had to work hard on this position to get it back in line. I didn't get stopped out though. You know what's crazy is, because of the way my risk was down here, right? The way that I positioned and the way that I was scaling in, I already had a scaled position that I was taking profits here and then repositioning that same position off of this higher low. So my risk was still down here for getting stopped out.
Yeah.
Now obviously this is super high term time frame, so that's going to look way different on lower term time frames. People were getting
Yep.
liquidated like crazy. Meanwhile, I was like, woo, and obviously slamming in DCA orders, but for the trade. And of course, this was beautiful Binance trading back then. And guess what? This was when they weren't going down all the time. Even they started to go down as we were moving into 2020, 2021, which was interesting. And then into the 22 bear market, where you couldn't log into your account and stuff like that when price moved fast. But even back here during the COVID dump, this was beautiful. It just hit the top side of the lows over here on the monthly. But the Bollinger Bands were a very important area. That's why I have lines all over my chart, because I want to see the confluence. And also this is where I set my alert levels on my non-stream chart. So really, really interesting stuff, man. I am also, I feel much like everybody else right now. I'm getting bored, man. So I'm playing in traditional markets. I'm going and I'm kind of getting into some shit coins, and it's like, just gotta pass the time. Like I'm on stage, I'm talking to you guys, and shit coining in the background instead of even like get a
Dude,
passive order.
the spaces and the streams help me a lot, because it is that gap between doing the homework on the chart, like doing the work of identifying the setups, putting in the orders, doing all that stuff, and then waiting for execution, right?
Yeah.
Or for things to play out. And so you fill your time with that. You fill your time with spaces, streams, DM groups, Watching other people, like jumping on your stream and supporting, jumping on trade flies,
Yep.
catching Cade with interviews and stuff, and just doing that, like the networking side of just building relationships with other people in the space, growing the list of peers, and yeah, and I think it helps me. A lot of people turn to, I think if you're trading, a lot of people turn to video games or turn to picking up a hobby or whatever. For me, that's kind of the hobby. It's like
Guilty. I actually have been gaming a little bit more. Kids go to sleep. I gotta sit there and watch one of them specifically. I sit in at night because he's got some issues that need to be addressed and watched
yeah,
out for, and there's no real technical solutions.
yeah,
But I'll sit there and I'll be even listening to a space while playing a game, right? And
yeah,
then I got my alerts set for trading. That's actually that's kind of unhealthy, I've noticed for myself lately. I kind of got to stop doing it because then I'm like super out of whack when I go to get up in the morning.
yeah,
But it is kind of indicative of also, I don't know if you're really publicly, I know you were around for the prior bear market,
yeah,
but publicly or not, it was a lot of fun. Like, and that's something that I've noticed this bear market is it's a lot of fighting, and last bear market was a lot
yeah,
of fun. Now, granted, there was a lot of fighting with analysts and stuff, and like you saw,
yeah.
like the various analysts that got taken out back once their calls didn't hit and kind of disappeared,
Oh yeah,
and kind of the controversies around it. But it wasn't like if you went into any kind of group setting that was trading focused or market focused, people were just having fun. It was jokes and roasts and having fun and screwing around and doing, just waiting it out. We're already ready to be positioned if we're not already positioned, and then moving forward with it. Shout out to Ash. Landy, what's your stop loss? Just wondering. Sir, as the author of Your Stop Loss Is My Entry by the King Puppet Landy, otherwise known as the Doctor of Crypto, Dr. Crypto. Oh, I just gave everybody a big hint. Might
Mm,
want to go on an alt account search now, huh? Um, but yeah, this I think we're starting to get there, but I also think that it's going to be short lived to have fun because I think that things are going to get really volatile and we're all going to be heads down managing trades here very, very soon. And it's going to be like across the board, right?
yeah,
Because when the volatility does hit, that in and of itself is the fun and less so the dicking around, right?
yeah.
Um,
You know
so
what's
looking forward
different
to
for
it.
me this time around from the last two bear markets is I it's what you said, right? This time around I've been much more public facing and public interaction,
Mhm.
whereas from the time I came into crypto through about, I want to say through about like 2023 or so, I was mostly in the telegrams, in the discords, building community there, right? Streaming charts there, sharing setups there, and not really doing anything outward facing, like on any platform. And I haven't done a whole lot of that until recently. Kind of started building a little bit of a community,
Mhm.
and then obviously with Wolf right now, we have like the greater Wolf community and the DM groups and the comments and all that stuff. But yeah, it's something that I'm actually looking forward to, man. I think if here in the future, in the near future, we if we had the opportunity to kind of build some of that community again, I think it could be fun, right? So
Yeah,
yeah,
absolutely, man. It's I think that we all are, right? We're
yeah,
not only are we building it, and this is where building in the bear is really important, is staying present and building is taken for granted. A lot of people will sit around and be like, "Oh, they're just lucky." No, you didn't get lucky sitting here building, whether it's
yeah,
building your social profile, your network connections in the space,
yeah,
building product. Um, it is one of those things, and Tradefly, obviously he came on earlier. Um, watching him in the space, getting to talk to him, we all have a lot in common, right? Me, you,
Yeah.
Ash, Nat, Tradefly, a bunch of people in the chat that I'm missing, and folks that are supporting, whether it be
Yo, David's
especially
in the
come through
chat.
the.
I hadn't seen him diss track coming. He says,
Is he actually in the chat?
"Yeah, I
Or
guess
is it a
he
reply?
just like no, no, no. It's well, I mean, I don't know if he's responding to someone else, but he says there's a diss track coming.
Of
If I
course,
scroll
there's
up,
a diss track coming. Yeah,
oh, shout out to David.
if see it, I told
I
David
like
that
your hair, David. By the way, your new hair. I like it. I
it's
like it
beautiful.
way better than your old hair, for
It's
sure.
beautiful. I told him one thing about the diss track. So I did have one criticism, and I'm giving him ammo here. Um, if you're gonna hit me where it hurts, because you can't say things like I ain't right about my calls. You can't say, you got to lean more towards, like, you can make fun of the magical lines, but the magical lines work. So you got to lean more into my inadequacies, like my inability, and like the fact that I could be some like fat slob behind the screen, and that's why I'm a puppet or something. Like, you got to lean more in the other direction, because I didn't feel, what I felt was, I felt like 4 songs with the puppet as the main character getting shot instantly. Like, you can't kill the character instantly. You gotta like level that up. There's gotta be a storyline or a through line, like Onyx told stories. I'm totally baiting him. Onyx told stories, right, in their songs, and you had a lot of lyricists that told stories in their songs, like Nas, and right. It wasn't, you know, you're forming a narrative, right? So you gotta fit more of that. Like, I get, when you come after the king, you best not miss, right? So, like, just saying, DG. Much much love to you. Look, that was a lot of fun. That was so much fun. And David's brutal, by the way. David is absolutely brutal. He will tear you apart. Yeah, he really does. I love it. And he's holding back. He's doing that with one hand tied behind his back. Like, big shout out to David. Obviously, you all know I love David. And for those that were tuning in, what's funny, Bits? There are still people, even though David's like, "Hey, it's all fun. We're just having fun. Just, I know I got to say for the crowd." Still, I got messages like, "I can't believe that he actually is saying these kind of, like, bro. It's literally, it's a roast. That's what you do. Like, come on." Like, if you, and I think what it comes down to is there's folks here who one, maybe don't know, maybe are here for different reasons, or maybe don't know the vibe of like the bear markets and the kind of fun that we used to have in those bearish times. Because when it's bullish, it is easy mode in a sense, but at the same time it's hard, because you're constantly looking for the areas where you're going to be taking profits, how you're going to be doing that. You're evaluating the health of, the structure, and like all of these other things. So there's a lot of things to do. It's a different type of work, where now you do get to sit back and relax. I mean, in most cases, for people like myself, I'm actually not a Bitcoin seller. I'm a seller of everything else in the bull. I am a hedge master, edging those hedges. Wait, that didn't sound right. All Diddy. All Diddy all the time. Look, I am a man in the arena. That's all I gotta say.
Yes.
And
Bullish
I'm
on the
making
arena.
sure that I win all the fights, even if they're with myself.
Oh man.
But Bits, much love to you for coming on. I appreciate you. And
Yeah,
for
man.
all of the folks in the audience, if you have not gone and followed Tradefly yet, you need to be doing so.
Yes.
Um, he is an absolute G. He understands the charts. I love that he brought up, like, he, as soon as I brought up BBWP, he's like, wait, you're gonna like this. And we kind of, riffing on what he has built into his own custom indicator set, which I think is awesome. And I look forward to having more conversations with him. Of course, yourself, and everybody knows where to find Bits. If you ain't following Bits, I don't know what the hell you're doing. Um, Follow Tradefly, follow Bits, Replay Gang. Shout out to you. I know you will be here. You want
Ghosty
to?
says he wants to listen to a drunk Landy.
Well, we'll get there. I will be bringing back at least one late night with Landy space.
Mm.
Just for you, Ghosty, just for you. And it for those that don't know, late night with Landy was late on the West Coast. Okay, this is the entire house is quiet, and here I am wiling out like a maniac in one part of the house. And it's already late. So it was very, very late for American East Coasters, but I often had a lot of people from overseas coming in and keeping me company. Um, but yeah, I look forward to talking to you again on Monday Bits. We'll probably talk in the chats behind the scenes. I want to thank the audience out there.
The panel.
Make sure I want to thank the panel,
Yes.
my support. I want to thank my support group, the panel. Y'all are doing great. By the way, Bits, you are doing such a great job. By the way,
Yeah. Are you proud of me?
I am. I'm very proud. I'm so proud of you, Bits. Shout out to Crank. I saw him in here as well.
Oh man.
Shout out to you, William. All right, so bro, I could literally sit here and talk. I got more. I've got like 35 minutes more, but I'm not going to do that to poor Bits because he just jumped in for a minute because he's got some time.
Yeah.
I do want to say to my audience specifically that is kind of that regularly watches my stuff. Please put Bits. Don't put them on notifications. Here's why you don't want to put him on notifications, because then if you get notified and you go watch his streams, it doesn't count as an original view towards the creator programs in X. That I just learned. That is
Wait,
so
what?
stupid. So if somebody has me or you on notifications and they hit the notification to come to a stream, that doesn't count as an impression for the new creator program.
Because
It
they're not
has to
seeing it
be,
as like an organic.
yeah.
Yeah, like it was served up in the feed or something.
That's
You
so
know?
that's so shitty,
Pretty
man.
stupid. Oh,
That's stupid because that was the whole point was, hey, come turn on notifications, make sure
yeah.
you're getting the alerts and stuff like that. I mean, look, what you should be doing is paying attention to when Bits goes live. Pretty regular schedule.
Yeah.
Sometimes you go live kind of randomly, but most will find you. Likes and reposts. For those that repost gang, it does go in its own little tab. Quote reposts are more powerful.
Yeah.
So if you quote repost, not only will you share the other person's content, but you will be providing an original content as well. So it will contribute to your impressions. I don't know how that is in the feed, the repost stuff,
Right.
quote repost. But if you are adding something to that quote repost and not just like I do fire emojis everywhere, which is just replies typically, but you will see that those impressions do add up in the creator program as well. So a little bit of X alpha there for you. Hopefully they change that. That doesn't seem right for notifications. Like
Yeah.
it's original content. Like you can't get any more original than half the stuff that myself, yourself, Wolf Crew is doing, ATC is doing, DG is doing. So, but with that, I'm going to wish you all a wonderful weekend, a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Yes, I will look at the rest of the market on Monday. Not much has changed. Most of the targets did get hit, and we saw a little bit of a pullback here and there to some key levels. But you'll first hear from me, likely, and Bits on the Wolf stage on Monday. You'll see me on DG's show on Monday when he goes live with the breakdown at 12 p.m. Eastern. And then Monday, I will have my Macro Monday video after market close. It will be coming out an hour after market close at 9 p.m. Eastern, 6 p.m. Pacific Standard Time. Shout out to all of you. Much love. And it's really great to see you all in the chat. Much love to you all. Seriously, truly. And with all that said, thank you again, Bits.
Yeah.
We're out.
We'll see you around, Landy. Peace.
Peace.